All right. Hello, everyone. Tim Davis coming to you guys with a market review. It is now still July the 1st, 2024. It's about 11:30 p.m. when I'm recording this. And just haven't had any time to do anything earlier this weekend. So I thought I'd just pop in and do it now while I was still up. So I'm going to start off by looking at the tool that tracks the percentage of S&P 500 companies that are trading above the 200-day moving average. And I'm going to start off looking at a lot of weekly charts because I'm going to show you guys the weekly charts have been giving us fair warning that the market seemed to be at a stall for a while, but it's been stuck in a range and like it's ready to start trending downward. So here is this tool, and it's an area that I've been watching and been uh, telling people to be mindful of for the past couple of weeks in my videos, that this 80% level right around here, I'll highlight that. So this 80% level has been a level that this tool has been unable to surpass quite a while, right around here, 80%. So we struggled to get back above 80% of stocks trading above the 200-day moving average for a while. And the last time we have been above that level in a significant way, got to go back, got to go way back. Back here, this is back in 2021 when we got about 97% of stocks trading above the 200-day moving average. It's the last time we've really been and up in a significant way above that 80% level. Since then, we've dropped below that 80% level. Have not been able to get back to that level, back to that high of 97. So, and that's been since the beginning of 2021. So since then, stocks have been all over the place. Believe it or not, I mean the percentage of stocks trading above the 200-day moving average, it's been all over the place, staying below 80. So it looks like now we are about to trend much lower. So we could not get back above this 80. We tried a couple times between October 2022 to now. Got above 80 just a tad bit in March of 2024, and this continued to trickle down from there. Where are we hovering at now? Right around 65%, and that's right above the 20%, the 20% moving average. So right above the 20 moving average, and it looks like we are about to break that level. So that's just what the overall sentiment is showing. Its overall sentiment is showing is that the market is starting to show some cracks. All right. Switch back to this weekly chart. You'll see the weakness here. Yeah, and I highlighted that area of 80%, and we've tried to get back to that level over the past couple of months, but only stopped right around 78, 79, or right at 80, and came right back down. And now we're struggling to get even back above 75. And it looks like this percentage tool is stuck below the 20-period moving average. So we're stuck below the 20-period moving average. And let's glance below. Look how far that I think we could go back down to a level of support. And that would take it all the way back down here to about 34%. And I do think we have a huge possibility to test that in the near future. There's something to be mindful of. That there's underneath the surface of this whatever all these stocks that are running high, underneath the surface there's a lot of cracks, and I think those cracks are about to affect the entire market, including Nvidia. So those folks who are high on Nvidia, keep that in mind. Look at the TTM squeeze. As you see, the red bar starting to form. That is a sign of weakness. That's a sign that the bears are trying to take full control. Look at the RSI pointing downward. And look at the CCI pointing downward, still in a downward motion. This is on the weekly chart. So this just showing us that the overall bigger picture, there's a lot of weakness starting to show up in this market. that we have to be mindful of. All right, let's look at a daily chart real quick. Look at that big red candle here that formulated on today. And look at the oscillators in the RSI pointing straight down. Oscillators in the CCI just crossed with a sell signal. All right, now let's start looking at our indices themselves. Let's go straight to the S&P 500. Here is a daily chart of the S&P. What I'll point out, as I highlighted already, an area that we've been stuck in, a range we've been stuck in for quite a bit. And here's a high up here around 55.23, and as you can see, there's a trend line there. Now, if you got a trend line to show you that price action has not been able to break above that level. We've been stuck in this tight range, so the market has really not done anything. It's been treading water, but I think that's about to give way. I think we're going to start to see price action really start to ramp up to the downside. It's my ultimate opinion. I don't think we're going to break out above this ceiling up here, above this 55,000 level, 5,500 level, anytime soon, in a sustainable way. I think the more likely scenario is that we'll test this 20-period moving average right here, and maybe start to head lower. Look at the CCI. Look at the CCI. Look how it's just it's we got a sell signal way back here in the middle of June, where we had this the green line dropping below the beige line as a sign of a market possibly getting weaker and generating this sell signal in CCI. And it looks like it's starting to trend lower. The CCI like it's making another dip lower on this daily chart. Let's take a look at a weekly chart of the S&P 500. As you can see, we are right and still showing an overbought territory on the weekly chart. Look at the RSI, still in overbought territory. Look at the CCI, just crossed with a sell signal, folks, on the weekly chart. CCI just crossed with a sell signal. That's something to be very extremely mindful of. And look at price action. Price action has been stuck in this range over the past 3 weeks, unable to break above this resistance level. And you can see how we have these 3 candles in a row. This week before last week, a week before this week, last week, you had a long shadow, the very, very short body of a candle. All this showing signs of a topping pattern. Topping pattern like we are about to reverse even on the weekly chart. So that's a look at the S&P 500. Let's take a look at the Dow Jones. Here's a weekly chart on the Dow Jones. Look at the tight range it's been in. Highlighted it for you already. 40,000 has been a level that we've been trying to get above, but has not been able to sustain a level, sustain a move above that level for quite some time. We hit it back here in March of 2024. Got close to it, and then we fell from there. Went down and tested around 38,000. Got a bounce from there. Went back up to test 40,000. Could not sustain a move above it. That was back in May, and we fell again. And now it's like we're in a very, very tight range, well below this 40,000. Like we're not even going to, possibly not going to be able to make that run back up towards the 40,000. It's like we are going to stay stuck here until price actions drop. And I do think we'll break this 20-period moving average eventually and start to trend lower. Then we have to see what happens. Do we break this bottom trend line? If we do that, folks, you're going to really start to see selling pressure starting to pick up. Let's glance at a daily chart real quick. What you'll see in the daily chart is some indecision here. As we hover above the 20-period moving average, do we bounce here or do we drop here? My thought process is that eventually this trading range will give way and break below this 20-period moving average on this daily chart. That's what I believe. Look down below at the CCI. The CCI already showing you sell signal generated. And that sell signal generated around June the 26th. Since then, you've seen a tight range with price action not really going anywhere. So that sell signal may materialize in the price action very, very soon. Sell signal and CCI may materialize in the price action very, very soon on this Dow Jones. Let's take a look at the NASDAQ. It's NASDAQ Composite, same scenario. You see the tight range in price action. And we've been in this tight range in the Dow Jones since about the beginning or the middle of June. Middle of June, been in this very, very tight shaded range with price action just hovering in that range. And it's like the 20 per moving average is not far from price action on this daily. It looks like we could possibly continue to trend lower to the bottom of this range and maybe test this 20 per moving average. We got a sell signal in the CCI way back here around June, say 14th or 13th. That's we got that sell signal back there. And since then, we've been in this tight range. So, needless to say, I think that sell signal we'll probably start to see it really materialize in the price action and see price action possibly drop below the 20 per moving average in the near future on the daily chart. And here's a weekly chart of the Dow Jones. And just like on the daily chart, you saw a sell signal in CCI. You got a sell signal in the CCI on the weekly chart as well. That's normally what I really start to pay attention to when you start to have sell signals at the same time in multiple time frames. That tends to be a very, very strong signal. And as you can see, look at the weekly chart. Look at this tight range. 3 weeks in a row, just been stuck in that range. I don't think we're going to break out to the upside. I think we're going to end up breaking out of this range to the downside. That's just my honest opinion. All right, let's take a look at the Russell. Here's the Russell, the weakest of the bunch, and it's really been in a struggle. Look at the tight range. Russell's been stuck, and it's been stuck in all this mess. And I don't think the Russell's going to break out of this mess. I don't think it's going to break higher. I think it's going to come back down to test the bottom of this range, of this trend line. And I think if we don't hold that, you're going to see the Russell drop well below this level. And that could be extremely detrimental to our market. So I do see we could possibly be in store for a sell-off, folks, as a significant sell-off. We could. We start to see price action in most of these markets start to break below some of these support levels. And we start to see things ramp up. So let's see if we stay in this range, in these ranges. That's you've been stuck in these ranges for quite a bit. I think eventually the Bears or the Bulls are going to win this battle. And I think right now the battle to be won is more in favor of the Bears right now. All right. Where else are we seeing some signs of selling pressure, some signs of Bears raising their ugly head and trying to sustain a sell-off? Let's look at some of these a couple of ETFs. Let's look at the XLF first. Look at the XLF. It's been stuck. This is XLF weekly chart, and it's been stuck also in a very, very tight range. There's the box. It's been stuck in that box, and right now it is testing 20 per moving average. It looks like the XLF wants to break below this 20 per moving average and hold that level below there. So we got to see what happens with that. But it got above 42 bucks back in May. And since then, since May, we have not been able to get back above that $42. We've been staying between 40 and 41, between 40, 41 and a half, or even getting real close to 41.90. But have not been able to hold a level above 42 since May. So trading in between 40 to 42 bucks, not been able to hold a level above 42, that's a sign to me that there's a stalling out pattern. There's a stalling out time frame. It looks like we've been in a stalling out period, and it's been stalling out for quite a bit. And I think eventually this stall pattern is going to turn into either a massive sell-off, or even a massive breakout. And I think we are more close to a massive breakdown than a massive upward move. Look at the previous up leg we had. Let me make this. Look at this previous upper leg we had. It was a pretty strong and long leg up. Went from 31 all the way up to about that $42 level. And that was from October of 2020. It's October 2023 all the way up to about March 2024. Since then, market has done nothing but trade sideways. XLF has done nothing but trade sideways. So how long do we stay in the sideways motion? Do we break out to the upside? I think eventually we'll break out of this pattern. But I think we're gonna end up breaking lower below this range. We break below this range, it started a downward trend. This downward trend could be as strong or as long as the previous uptrend. Look at that from October 2023 all the way up to March 2024. Could we see a down leg just as long? That's a possibility. We gotta wait and see. Let's look at the XLF. Take a look at the XLK. Let's look at the XLK. It's been in a nice uptrend since about March of this year. So here we go. Right here, March 19th, we started a nice upper leg. Small pullback here in towards the end of May and just bounced off 20 per moving average, went higher, got up to about 232, and since then it is trending lower, resting just above this 20 per moving average. Do we break below this 20 per moving average? My guess would be yes. That's a possibility. Look at the CCI with the sell signal. As prices were going up, CCI it popped up with a sell signal beginning of June. You see the tan line or the beige line cross above the green line, and the green line start to point lower. Looks like the green line just starting to separate and point to a deeper downward move on today. So could that be a signal that we're about to break below the 20 moving average? That is a possibility. Have to wait and see. Let's look at XLK. What about some individual stocks? What about everybody's favorite darling, NVIDIA? NVIDIA has been on a tear since, hit this all-time high, or this high pay around 140, and look at it, had immediate reversal back to the mean, back to the 20 per moving average. I think that was the sell signal that showed folks that there was about to be some trouble brewing in the overall market. So pull back to the 20 per moving average. It looks like it just settled here for a minute. It's like it's ready to take the next leg down, folks. That's just my honest opinion. I don't think we're going to bounce up and recover back up to that 140 level anytime soon. I think we're going to see a sell from this 20 per moving average eventually. That's what I personally think. So we have to wait and see what happens with that. That's what the daily chart looks like. Take a look at the weekly chart. Look at the weekly chart. Look at the CCI cross with a sell signal back in about around June 24th. And we see what happened since then. Traded down, almost like a little bear flag here. Looks like we're possibly going to be heading back down towards this 20 per moving average on the weekly. That's NVIDIA. Let's look at two more. Meta. Let's look at Meta. Meta platforms, or Facebook, should they say. Same scenario. Meta weekly chart shows a big move up towards that 531 level since then. Pull back significantly back to the 20 per moving average. 20 per moving average has been acting as support. And right now, Meta is sustaining a level above that support. Do we break sometime soon? We have to wait and see. Look at the CCI. It's like the gap between this green line and the beige line is starting to close, which possibly could be signaling a possible sell signal that's about to appear in its weekly chart. Look at the daily chart. Daily chart already got the sell signal. Got the sell signal on today. So CCI pop with a sell signal sometime today, or yeah, even day or Friday. Look at that sell signal. Probably was Friday. And since then, look what's happened. We back to that 20 per movement average on the daily, like it's threatening to break below it. Take a look at one more. Walmart. Walmart, same thing. Look at the RSI pointing straight down. Look at the CCI cross with a sell signal and it's trending downward. And look at price action. Stop right at 69 bucks. Trended down to the 20-pip moving average like everything else. Been hovering above that 20-pip moving average like it's possibly about to break it. All right, folks. Hopefully this is something you can use. But before I go, let's just glance at the VIX because the VIX has been showing, it's been showing us, it's been dead as well. It's been just stuck hovering around the lows for quite a bit. But it looks like, look at the CCI and the VIX. It looks opposite. Looks like it's ready to turn up and possibly green cross above the baseline for a possible buy signal. It's just the opposite of the markets, folks, don't you think? Look at the weekly chart. Weekly chart shows, let me move this. It actually showed a buy signal back here around the middle of June 17th. We had the green cross back above the beige, and it's just been hovering there. It looks like, and it looks like the green is staying above the beige. Could we be about to see a turn up? That is a huge possibility. So I wanted to point that out, folks. Wanted to paint the picture to show you guys what the overall market is telling us underneath the surface. So in general, it's like it's telling us that we could continue to stall in overall markets or see a sell-off very, very soon. And we could start to see prices rise higher in the VIX and prices go lower in the major indices. All right. So that is something to pay attention to the rest of this week and frankly, the rest of this summer. Until next video, Tim Davis signing off.